Hello friends, welcome to my channel FinTech Logics. So today we will talk about another facet of this mutual fund, liquid mutual fund, which is tax treatment. So as an investor, we should definitely know that how much of tax we would pay for that and how that reduces our yield. So let's begin. If you have not seen my video on liquid mutual funds, I'll provide the link here. Please have a look. Now, from your any mutual fund angle, we should know that either we get taxed from the angle of short-term capital gain or long-term capital gain. So short-term capital gain as in when your investment horizon is less than 3 years, and if it is more than 3 years, then we get long-term capital gains. Now, in some cases, your tax slab based also taxation happens and at the end of the day, because of this tax, our gains reduce and in turn our yields reduce. So that is why we are talking about this thing in great details now. So let's begin. So if we look out for the tax implications, now if it is sold before 3 years or it is sold after 3 years, as per that, let's divide our gains. Now if it is sold before 3 years, then so when I talk about sold, so I mean redeem. So redeem, that means partial or full. Sold, it you might use that term that you get away with the entire unit, you sell all the units and you switch. So that means you move from this mutual fund, liquid mutual fund, to some other mutual fund as well. So that is as good as you are selling this liquid mutual fund and buying something else. Now in this case, the gains is treated as short-term capital gains. So in this case, your gain is very simple. From your sell value, you deduct your investment value and then you multiply with the number of units. So that is your gain value. Now this is taxed as per the tax slab of the investor. So you might be in any bracket, your 10% bracket or 20% bracket or 30% bracket. So as per that, this gain percentage is also added as your taxable income and you have to pay the entire amount. So if you are on a 30% bracket, then it substantially reduces your net yield. Now, contrary to this case, if it is sold after 3 years, then in that case, this is treated as a long-term capital gain. So in that case, there are two bifurcations of this tax treatment. So one is if you are doing indexation. So let me make it very simple. So there is a concept that every year inflation is increasing your goods and services price by certain percentage. So when somebody says that, okay, we are doing an indexation, so that means the purchase prices, the investment values are also adjusted as per your inflation rate. So that is why if you are doing an indexation, your tax consultant doing an indexation, then this is post that 10% of gain is taken as your tax. If it is not indexed, at that point of time, 20% of gain is taken as your tax. And this definitely does not include your surcharge. Now, this is in short gives you idea about the tax implication. If you need more details about that, I have given the link here. There is a very beautiful write-up written by Income Tax India government with illustration where this will give you the entire details of how the tax is calculated for your liquid mutual funds. Thanks a lot for watching my video, viewers.